The top 10 holdings in the Nasdaq 100 make up over 50% of the weight in the Nasdaq 100. So needless to say, the FAANG stocks are very important to the market's direction. In today's video, we're going to be discussing whether or not we're about to see the Nasdaq 100, the Qs, or some of these big tech stocks start to rally again. Let's get into today's show. You can feel it now. All these retail traders are eagerly waiting at the buy the dip moment, and that could be where we are right now in the Nasdaq 100. We're not looking at a log chart right now. We're clearly in a channel that has been trending up. This recent pullback right here is almost in correction territory, down around 8%, creating a lot of fear out there. People are calling for a stock market crash. But really, if you zoom out, you can see clearly we have a high, higher high, higher high, a low, a higher low, a higher low, and a higher low, and a higher low so far. All the moving averages are still trending up, but we are below a couple key ones like the 50 and the 20-day. So the bulls have some work to do. All right, we're going to start talking about not only the FAANG stocks, and I'm going to give you really just bullish views and bearish views to this. And to me, there's an opportunity here for a bounce, especially after seeing today's crazy price action. But I want to present to you both, I want to give you a bearish look and I want to give you bullish looks. So we're going to do that on multiple time frames and through multiple different tech stocks going forward. So let's go ahead and kind of continue here. Now, somebody said you're not using a log chart. If I throw on a log chart, I like using log chart. I like using the regular chart too as well. Log charts I like to use on longer term charts, just to get overall trend views and stuff. But, I flip back and forth. But that's, needless to say, like when I'm drawing a channel out, so for example, this one is a log chart, all you have to do is really connect the highs, connect the lows if you're looking to find the trend. And it doesn't need to be so perfect. You want to at least have connecting two areas, the meat of the position. So you connect the low, 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 high, 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 and you can still see it's very similar. And then with this data, then you create whatever your trade plan or idea is, right? I drew this out a different way where it was tighter and it looked like it broke down. I redrew it out. I can still draw that, but I was also calling for, hey, this could still be a bear trap, and that is still a possibility. And this is still a possibility that this falls. So me personally, I drew it like this because I'm not necessarily in a bearish mode right now, even despite this 8% drawdown. I want to create trade plans around a bullish perspective. And if it breaks down through these levels, then I know the areas of support based off of other market brief shows of where I'm looking to go long. But right now, I'm starting to see a little bit of an opportunity. Could I be wrong? Yeah, but the risk to reward is what matters the most. So if I'm wrong, it's a small loss. If I'm right, well, the reward will be significantly greater than that small loss. And that's how you have to think about it in terms of risk, right? That's how you have to trade this market. Nasdaq 100 is down 8.4%, and it's been over a month that it's been down. So needless to say, the people that have been buying the dip, they've been getting shooken out. So they're probably waiting on the sidelines for when is that next dip to buy? When can I make that money back? Because this has been a pretty treacherous move to the downside. And then we have, all these narratives and all this news around us that's taking place. It's been a wicked ride. It hasn't been easy. Now, if we look at this 8.8%, 8.4% correction, it's not quite to 10% to consider on Wall Street a correction, blah, 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 whatever. But if you just look back at the previous times that it tripped within this channel, we have a 14.4%. That was after that August blow off top. We have a 10%, 12%, 8%, and another 8% roughly turn down. So when we see these type of moves between 8 and 12%, we've typically gotten rallies. And when the RSI gets overextended, we typically get some types of rallies. Is that a guarantee? No, but you can at least create trade plans around those ideas. The PPO down here looks like it's trying to curl up, and you can see the histogram starting to gain momentum there too as well. Let's continue. Let's look at some signal charts. Okay, this is also leads to more of a bullish perspective from a contrarian standpoint. What do I mean? Well, very similarly to the last September and October, we had this coiling action on the BPNDX chart. It broke down, it hit around this 30 to 35 range, it got overextended, and then we rallied up later. Very similarly, we're getting this coiling action. We broke down to this 30 to 35 range within the same time frame, and now the RSI is really honestly burnt to a crisp down here, which signals as it's turning up the opportunity to potentially see a bounce. And most importantly, is if you were bearish right here, does this sound like the greatest area to go short? Not really. Why would you short into this overextended to the downside area? You can get lucky for sure, and it can head lower. That's an obvious, but it's just not the greatest opportunity if you're holding it for multiple periods of time. Like if you're intraday trading, you know, that's not really what this signal chart is for. Intraday trading, you can see price action and volume on a smaller time period, and you can be very successful scalping the market. That's not really what this particularly signal chart is for. Let's look at the percent of stocks above the 50-day moving average. This is another reason why I'm like, okay, it could be coming to an end on this drop, or it could just be the part of a dead cat bounce where it bounces. Okay, the percent of stocks above the 50-day moving average just crossed above 20, so it's basically saying 27% of the stocks right now are above the 50-day moving average. But when it gets down to these low readings, where it did in November or October, and then also September, what happened? We rallied right here. We rallied right here. We're starting to see a little bit of a bump up. Does that mean we're gonna drop down like this? I don't know, but I mean, the last 3 times this has happened, we rallied. Okay, it doesn't say how high it can rally, but it does give us data saying, hey, no, it could actually rally. Yeah, it could head down a little bit lower, but we rallied. Okay, so that's what that is to me is saying right now. And then another thing, I posted this on Twitter. If you don't follow me there, you can follow me there. This is the new highs, new low index for the Nasdaq. Big move down today. Still a positive divergence, right? You have a low, a lower low, a low and a higher low. Now, why I'm pointing this out is this little green zone, minus 200 to minus 300 plus there. When the price action of the new high, new low index comes down into these areas, as highlighted by these blue lines right here, what happened to the stock market? What happened to the Nasdaq 100? Bam, it rallied very hard right here. Bam, it rallied right here. Bam, it rallied right here. Bam, it rallied. So this is not about certainty. This is not what I'm trying to say. It doesn't mean for certain it's going to happen. I'm trying to look for ideals in the favor of a trading plan, trading strategy. So for example, when you overlook all this, you say, wow, okay, so we're back at these readings. Can it go lower? Yes, it can obviously go lower, but the last 1, 2, 3, 4 times that it reached down to these readings, it went up higher. And then you pair that with this signal chart over here, and you're like, okay, well, the last 3 times that this happened, it actually went higher. And then you pair this with this over here, and you're like, well, you know, when it got down to these levels, it actually went higher. All right? So can it be wrong going long? Yes. But when all the ideals are in your favor, right, it gives you better odds of success. And then when you pair that with the current price action of where the chart is, you can set up a good trade plan. Hey, I go long here, I have a stop under here, and if it rallies up, awesome, I just made a great amount. And if I get stopped out, well, I only risked this much to gain this much. You know, so it's about, you know, a 3 reward to 1 risk type of trade right there, and that's kind of why I like the setup. Now, let's get back to business. Semiconductors make up a big portion of the composite, and obviously we've had a big pull down correction in the semiconductors. It's been very volatile, down 10.4% from its previous high right over here, and we're at the extended lower range of the Bollinger Band, and we're running into a 200-day moving average that is inclining, right? The price percent oscillator is still bearish. It's below 0, but the histogram's kind of turning up. RSI got a little overextended, but it's starting to bounce. We have 9% correction, 8% correction, 14%, 6%, 9%. When it gets down to these correction sizes right in this range, what happened? We bounced. All right? Is this time different? Are we going to just fly down to 200? I don't know. Maybe if we give up the 200-day, but I don't think it's going to be just a straight shot there, because when bear markets start, typically what you see are huge rallies, and that sucks in more people before it goes lower. All right, so you got to be tactical. It's still a very tactical environment that you need to be in, and you need to operate very, very carefully with your capital. Semiconductors on the 15-minute time frame is also looking pretty interesting right now. Now in the short term, it's still bearish, right? The 5 days still sloping down, price action's right next to it, but from a bullish perspective, we have a low, we have a higher low, we have a higher low. Volatility is contracting right here, and if we can get above this volume profile right about 256, that sets us up to potentially call this a bottoming pattern. and then we could bounce up, we could maybe back test, and then we can start heading higher to potentially fill this gap right there, which is closes right around 271. Now, what does that look like on the Q chart? Well, let me pull that up. Actually, no, that's just semiconductors, but we'll look at the 15-minute Qs, and then we'll talk about that gap. So also the same thing is taking place with the Qs, right? We have a low here, we have another low there, we have another low here, and it's starting to kind of build up, but we're still in a short-term bearish trend. All right, so it's not like, hey, it's going to go up. No, it still has a lot of work to do. If we can get above this 361, 362, where all this price action is here and this volume profile, that sets the stage to come up and potentially fill this gap right at around 370, all the way up to this next gap, which is around 373. But what does that look like on the Q chart if we were really to come up to this 370 range to close that gap? That's important. Let's look at the Q chart, and you can see right here at the 50-day moving average, it's at 369.68, basically 370. So if we see a very strong move right here, that can act as a level of resistance, as it already has, and it has acted as an area of support too as well. Right? That's in confluence with 1, the gap, 2, the 50-day moving average, 3, a declining 20-day moving average. So there's a lot of work for the bulls to still do, but it still presents potential opportunities to go long. And then you see the price percent oscillator also starting to curl up. It's not going to be easy for the bulls, but there's the opportunities. And I hope that I'm making sense there. Now let's hop into the FAANG stocks, because the FAANG stocks are what really move the market. It moves the S&P 500, it moves the Nasdaq 100. You can see here, I mean, shoot. So we're going to go through all of them. We're going to go through them all fast. It's getting overextended to the downside. Histogram's turning up. RSI got overextended. Facebook's been slaughtered. And, you know, it's kind of just trading within these candles right here. So we need to see, you know, it get above, I would say 340, this kind of range up in here, to present an opportunity to shoot higher. That can act as a very strong level of resistance. It has been getting thrashed. Just straight thrash to the downside. So it could be wedging. But like I said, 50-day is starting to decline. 20-day is in a sharp decline, which is more shorter term. And then the 100-day, the larger one, we're below that too. So not looking too hot really at all for Facebook. It's going to require a lot of work. Now, I will notice that the volume, big pickup in volume these last 3 trading days. And that could mean that we're seeing an exhaustion type move to the downside, capitulation. And then we start seeing the bounce from there. Okay. Let's continue on. I'm taking too much time on the FAANG stocks. Apple is back above the 100-day, but we're still below the 50-day. This could kind of be considered a double bottom right here. You have a low right here, and then it's kind of just bottoming out right here. We had the pull, and then we had this little shot, and then we move down. We need to see it recoup right here at about 148. And then, if that's the case, then we're clear sailing. That means it could come up to this previous high right around 156. Has a lot of work to do, like it's below the 50-day, right? And it's below the short-term 20-day moving average. But you know, you can see that the histogram is also turning up, and the price percent oscillator momentum slowing to the downside is what that signifies. RSI is still below 50. Let's continue on to the next stock, Google. This is one that you really want to pay close attention to because of one. Its market cap is $1.83 trillion. It was a 2 trillion from what I understood when it was up here. So 1.8 trillion means that, hey, this market cap, this stock can very well make a big movement. It can hold the S&P 500 down, it can hold the Nasdaq down, or it can make it move higher. Okay? So pay very close attention to this one. Short term, we're still below the RSI on the 50. Price percent oscillator also curling up here. Momentum's kind of dying down to the downside. Big move today, up 0.86%. We gapped up, we ran up higher, but you know, we're still below the 50-day. The 20-day is crossing below it. So short term, it's still in obviously this bearish context. It's above 100-day inclining moving average. So that is a good sign as long as it continues to hold there. But really, we need to recapture this previous swing low or swing high right here. So we have a high, a lower high. Now we need to take out that because if you have a high, a low, and another low, short term, we are what's called trending down, right? Let's carry on. Let's go to Microsoft. Microsoft is also a huge one to pay attention to. $2.2 trillion market cap. This can hold the market in place or it can put pressure on the market, okay? Where did we close? Right at the 50-day moving average, and the 20-day is right there pointing down. It's going to act as an area of resistance. You can see it closed right into it as it filled this previous gap right here. Okay, price percent oscillator is curling up, but it's still below 0 like the other ones. Histogram's turning up. RSI just got now back above 50, so that is a good sign so far, but we need to see continued movement. Now, pay close attention to the volume profile. And I haven't been pointing this out, but on the way down, volume increased. On the way up, volume's kind of declining. That's not a good sign, all right? You want to see the price action move up with inclining volume, and you want to see the price action fall on declining volume, okay? That would be a much better scenario here. And let me look at this one. Yeah, the same thing with Google. Look at this. This is even more clearly defined. Falls, boom, picked up in volume right here, okay? Rallied, declining volume, okay? So this could be just a fake out move, and then bam, to the downside. That would be the bearish case, all right? So you got to be still very careful, and that's where I'm getting at. You got to be very careful. Microsoft, we already went over. Amazon, this could very well be a potential double bottom, right? We have a low here, a low here. We have a big pull, bounced up, boom. Got to clear this 355, what's called 3560 to be called a double bottom, and that shoots us up to probably this previous high over there. But we're below all these key moving averages. All right, the price percent oscillator is curling up, but is also below 0. So still, from a bearish perspective, the bull's got a lot of work to do, okay? A lot of work to do. Now, Netflix, on the other hand, is like a rocket ship. Now take a look at this volume. It's been going up. Volume's been going up. This rally, volume inclined, inclined. Then when it pulled back, it did so on declining volume. So this is very strong looking. Now, Netflix doesn't hold the weight at those other stocks that we just discussed, right? 283 billion market cap, but the other ones were in the trillion, right? So Google, Microsoft, those are the big dogs, but Netflix is still important, but the chart looks extremely bullish, a little overextended to the upside, but overall, like, this is one where you probably want to look for opportunities to buy individual dips because of just how strong it has been performing. Now, this candle right here threw me for a tailspin. This one, it was a bearish engulfing candle. Didn't get the follow through to the downside, so that's one thing. But then we had the gap up and then just rip up higher. So very interesting stuff going on there with Netflix price action. If you take a look at Tesla, also a very important one to watch. This, to me, does not look bearish at all. And Tesla almost has $1 trillion market cap. I mean, not all, I mean, $774 billion market cap. It's still big. But this is what we got to watch. If it cracks 800, if you go into a larger time frame on the chart or look at more data, you'll notice that there's not much to stop it from moving up significantly higher. So 800 is a key level. If we get a break of 800 and you see increasing volume, that's a good sign. Okay, increasing volume, and you need to close above that 800 marker. That to me says, hey, there's an opportunity for Tesla to scream higher. Now, Netflix, Tesla, those look really good. A couple other ones have a lot of work to do. What is something that you need to pay very close attention to decide whether or not the market, the Nasdaq 100 tech stocks are going to continue to rally here, and that is the 10-year yield. You got to pay attention to the TNX. Why is that important? Well, when the TNX rate of change moves significantly quick, like it did right here, pow, to the upside, what took place in the market for the Qs and the Nasdaq 100? Well, simply put, it rolled over, right? When the 10-year yield rise, tech stocks, and it rises rapidly, the tech stocks feel the pressure. Now, if it falls, that could be the opposite case, right? When it fell through down here, boom, right? Tech stocks did quite well. So right now, as it's standing, it's forming a little bit of a bull flag. And if we crack above this 1.5 right here, 10-year yield, it sets the stage to potentially go take to 1.75. So that is something that we want to pay attention to. If it broke out, it doesn't matter. Like if it just trails like this, that's okay. But it's the rate at which it moves puts a lot of pressure on those tech stocks. Now, if you take a look at the TLT, right, they work inverse in one another. This is the bonds. If this breaks down from this bear flag, obviously it's going to see the breakout of the bull flag on the TNX. But right now, as it stands, it is just kind of basing around this little 143 to 145 level, coiling up. If it starts breaking down to the downside, and it can fall fast. It can fall, if you pay attention to the volume profile. See this volume profile right here, this spike and this right here, and then it has just this air pocket right in through here. Well, I mean, that means, to me, boop, right over to here, 138, 139. It would be an easy fall, and that would actually be probably a full measure of this bear flag. That would signal probably, obviously, the 10-year yield to spike up to that 1.7 or that range up in there. Tech stocks would feel more pressure. The overall market would feel more pressure. So as long as we can just range trade, stay within this area, maybe move up, down, whatever, I think tech stocks are fine, and that feeds to the narrative for the bulls for the tech stocks that we went over and the Qs and the Nasdaq 100, and that should help the S&P 500 too. That's all I got for you on today's episode. We went over bullish perspective. We went over bearish perspectives. I hope that gives you some insight into the things that I'm looking at. Have a wonderful day.